Hello everyone. Today we're going to talk about how to build a revenue stream, step by step. First, let's talk about what a revenue stream is. First, passive income usually comes after active work. You have to build something, buy something, learn something, manage something, or take some form of risk. A rental property is not passive if you bought it over leveraged. The key is always do your own due diligence before you start building a revenue stream. The first principle is basically, we want to build income systems. A income system is the repeatable process that helps that money keep coming in. As everyone knows, the first income stream for most people is earned income. That could be your job, salary, hourly work, commissions, overtime, freelance work, consulting, or a service you provide. You got to remember that earned income usually funds the rest of your wealth building system. Always ask yourself, am I maximizing the income stream I already have? Can I improve my skills? Can I negotiate better pay? Can I move into a better role? Can I learn sales? Can I freelance? Can I create more value in the marketplace? The first layer is financial stability. That means knowing your numbers. How much do you make? How much do you spend? How much debt do you have? What are your minimum payments? What is your cash buffer? What money is leaking out every month? What could you cut, renegotiate, automate, or improve? This is the foundation. Second layer is investing. This is where a lot of people start thinking about stocks, index funds, ETFs, retirement accounts, dividends, bonds, and long-term compounding. Investing is one of the most powerful wealth building systems available. A disciplined investing process is key. What that looks like is you got to look at business quality, valuation, earnings, balance sheet strength, risk, catalyst, position sizing, and time horizon. And when you think about stocks over the next 12 months, you should think in scenarios, not in certainty. For example, there's the bull case, the base case, and the bear case. Let's go ahead and take a quick look. A bull case would be earnings improve, interest rates become more favorable, investor confidence rise, and quality companies continue to grow. In that environment, stocks may perform well, especially businesses with strong balance sheets, durable cash flows, and real earnings growth. Now let's take a look at the base case. This would be where the market is mixed. Some sectors do well, some struggle, and returns depend heavily on valuation, earnings quality, and investor expectations. In this environment, discipline matters more. Now let's look at a bear case. Inflation stays sticky, rates remain higher than expected, earnings weaken, unemployment rises, or valuations compress. In that environment, cash reserves, diversification, and risk control become extremely important. You gotta remember, investing should be a process. A lot of investors like the dollar cost average starting out, and we're a big believer in the FIRE movement. Take as much of your earned income as you can and put it in investments. Once you have your foundation. Now let's take a quick look at the third layer, which is business income. Business income can be powerful because when built correctly, it can scale. A business solves a problem for a specific person in a way that creates value. Before starting a business, ask, who do I help? What problem do I solve? What result do I provide? Why should someone trust me? How do I deliver the result? How do I get customers? How do I follow up? How do I improve the process? Business income becomes more durable when you turn it into a system. That means offers, scripts, checklists, workflows, customer service, follow-up, delivery standards, and financial tracking. The fourth layer is content income. This could be YouTube, Facebook, Instagram, LinkedIn, newsletters, courses, sponsorships, affiliate income, digital products, coaching, or paid communities. Content income is attractive because content can become an asset. One video can keep getting views. One article can keep ranking. One newsletter can build trust. One framework can become a course, checklist, lead magnet, or product. You gotta remember that you need consistency, a clear message, a defined audience, a repeatable content system, and you need to study what works. You need to build trust before you try to monetize attention. For example, one long-form YouTube video can become several short videos, a LinkedIn post, a Facebook post, an Instagram carousel, an email newsletter, quote cards, and a downloadable checklist. This is how content becomes a system. You're building an asset library. The fifth layer is real estate. Real estate can be a powerful wealth building tool because it can provide cash flow, appreciation, leverage, tax advantages, and inflation protection. As always, you got to do your own due diligence. You have to understand the numbers before you buy. You got to understand purchase price, down payment, interest rate, monthly payment, insurance, taxes, repairs, vacancy, property management, maintenance, tenant risk, liquidity risk, and cash on cash return. As as always, you need to build a system before you expect the income. We always advise everyone to have an entry point strategy and an exit strategy, just like with any investment. You need to know what you're going to do through the whole process, what you're going to buy the property at, what you plan on making on the property until you sell it. You always want to know your return on investment, and the better you plan, the more money you can make. Also, you got to remember that everyone has different personalities and different risk tolerance. So you've got to find the right revenue stream for each person. If you have debt and no emergency fund, your next move is not going to be real estate. It may be stabilizing your cash flow. If you have strong income but no investments, your next move may be a basic investing system. You have to remember, if you have knowledge and consistency, your next move may be content creation. If you have capital, patience, and understand numbers, your next move may be real estate. It just all depends on what your financial situation, what your long-term objectives are. And you got to remember, in which order you do things matters. Here's a simple framework. Layer 1, stabilize your personal finances. Layer 2, increase earned income. Layer 3, automate saving and investing. Layer 4, build one scalable side income stream. Layer 5, turn that side income into a system. Layer 6, reinvest profits into assets. Layer 7, repeat carefully. The key is to be consistent and, always do your own due diligence. So that way you can let the compound effect work over time. If you want to take a look at a compounding scenario where you're consistent, they strengthen earned income, they control expenses, they build a cash buffer, they invest consistently, they start with one side income stream, they document the process, they improve it over time. Then they reinvest profits into long-term assets. Really, at DeLozier Investments, we advise everyone to start with stocks, or real estate. It's whatever you're more comfortable with. Everybody's risk tolerance is different, but really, the key is to have your money working for you. Really, one key question you should always ask, before starting your next income stream, is my current income stable? Am I spending less than I make? Do I have high interest debt under control? Do I have an emergency fund? Am I investing consistently? Do I understand the risk of the income stream I want to build? Do I have the time, skill, and capital required? Can I build this into a repeatable system? That's how to think like a wealth builder. Wealth builders think in layers. Earn, save, invest, build, systematize, reinvest, repeat the process. Always remember, you got to build the foundation first, then add income streams one at a time. Make each one stronger before adding the next. The goal is more control, more resilience, more options, more long-term freedom. Multiple income streams can help you become financially free and eventually create generational wealth. But only when they're built with order, discipline, patience, and risk awareness. The key is to build the system first. If this video has helped you, subscribe to DeLozier Investments for clear, practical advice on money, investing, business, and long-term wealth building. Appreciate you watching the video this week. We'll make another video next week, so be sure to stop back in and watch our latest video. Hope everyone has a very profitable week.